The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
The bull thesis may not have broken, but is certainly being put to the test. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Katie Greifeld. We're kicking you off to the closing bell here in the U.S. And boy, we have some green on the screen to end a very rocky week. The S&P 500 higher by about 1.4%. A similar story if you take a look at the NASDAQ 100, where your big tech names live. I will point out the S&P 500 still lower on the week. Interesting today, you can see the outperformers. Actually, the Russell 2000, of course, up by 3% right now, sort of a high beta play here. And then you take a look at Bitcoin, not exactly joining in on the joyous action. Bitcoin down another 3.5%, Romaine. You take a look at where we stand, down below $85,000 a coin.
Yeah, I'm not sure what you and your friends, Katie Greifeld, have done to Bitcoin, but we have to talk about it at some point today. A bright day for stocks. It's still not going to be enough to paper over an otherwise dim week. In fact, the price action this Friday, a bit of a distortion, skewed and amplified by rotational repositioning around $3 trillion notional of options expiring today. So even if today's green does stay on the screen, the read on the week is still red, with the once world-beating NASDAQ 100 set to post its first trifecta of weekly losses since March. Why? Well, you can blame NVIDIA if you want, or you can blame the economy. We got another delayed economic report from the government, and it did show inflation-adjusted wages stagnant for a second straight month in September. Furthermore, and more up to date, is the University of Michigan's consumer survey that shows sentiment in November falling to one of the lowest levels on record as Americans' views of their personal finance situation, that's soured to the lowest since '09.
It's really about cost of living and affordability. That's what the consumers are telling us very loud and clear throughout the interviews. Consumers remain very frustrated by the persistence of high prices. But what's new in this year is that consumers have definitely perceived that labor markets are weakening.
And the mixed bag of Fed speak not instilling much confidence in markets for an immediate white knight rescue for the economy either. And I've talked a lot about Bitcoin, how it's become of late a slightly better barometer of market anxiety than the VIX itself. Today, no different. Fourth straight week of losses for the coin called Bit, setting up what will be the worst monthly performance since that string of corporate collapses back in 2022.
There you go. Yeah, and you remember 2022.
Yeah, see?
Now
I did
it's
it
in
too.
my head as
Yeah.
well. Certainly, it feels like the sector was really just ready to put that in the past, maybe coming back. We're going to talk about that and more, but let's take a look at the S&P 500 and put the wild action that we've seen so far this week, so far this year, into context, because you're taking a look at 1% overnight gaps in the S&P 500, when the S&P 500 has actually managed to then erase them. And it's pretty astounding. It's only happened 8 times since 1984, all of those coming in the past decade. We had 2 such occurrences in 2020, of course, in the heart of the COVID pandemic. We've had 3 so far in 2025. One of those happened in April, that back and forth that we saw coming out of Liberation Day. Another in the summer, and of course, another one this week, Romaine. So just another way of looking at all of the intraday and overnight volatility that we've seen in the S&P 500 in some of the biggest names on the market.
Absolutely, and it's an interesting setup, of course, heading into what next week will be a shortened week here for the Thanksgiving holiday. Michelle Weaver joins us this Friday, U.S. thematic and equity strategist at Morgan Stanley. And I do want to start off with sentiment right now. I mean, we came into this week knowing NVIDIA was going to be a big test for the market. On one hand, it might have passed that test, but it seemed like it raised more questions than it did actually supply answers.
Yeah, so I would say the AI narrative is largely still intact. We saw very strong numbers put up by that company earlier this week. But when we think about sentiment in terms of the market overall, it's really been about the Fed. What are we going to see in December? Are we going to get that cut or not? We're seeing a continued delay in some of that government data from the shutdown. So I think more towards the beginning of the week, people were saying, I don't know if the Fed's going to be able to make a decision there. The market was enduring quite a bit of choppiness, quite a bit of uncertainty. After the more recent comments from Williams, though, of course, it seems like that December cut might still be on the table, though from a Morgan Stanley perspective, our economists think that we're going to get a dovish pause in September and we'll have 3 cuts in next year.
In December, you mean? The dovish pause.
A dovish pause in December and then 3 cuts next year.
And then 3 cuts next year, but that gets to the idea too. Does that become an upside catalyst for the markets? Because there's been a lot of talk that as the Fed starts to cut rates, obviously that's supportive, lower rates, but it's also an indicator that maybe economic conditions were worse than we thought.
Yeah, so I would say, the market and the economy, they're of course related, but they're more distant cousins versus siblings. So how the economy goes, yes, that is very important for the market, but the market largely pre-trades that. So I think once we do see more of that Fed action, then the market is going to say, okay, let's start trading in a bit more of an early cycle way. We actually recently upgraded small caps overweight versus large caps. We do think that there is going to be more risk appetite as we get into the first part of next year. But I think it's really, you're going to see some choppiness until we get that December decision.
Well, talk us through that small cap overweight versus large caps, because that seems pretty bold. Not just that you're going to see small caps maybe perk up a little bit, but that they're actually going to outperform large caps, which includes tech. How much of that comes down to rates? And as such, how much is at risk if the Fed isn't able to deliver those 3 cuts that you're expecting?
So I think a lot of it is due to earnings revisions. So we've seen small caps really struggle over the past couple of years. The market and investors have really been focused on the highest quality parts of the market. It's been all about AI. It's been all about large cap stocks. That's really a quality trade. But if we look under the surface and think about how earnings revisions breadth is performing, and that's how analysts are revising estimates up versus down, small cap earnings revisions breadth is actually turned around quite a bit. So we do think that small caps under the surface are starting to think about this transition from a rolling recession into a rolling recovery.
So an up arrow for small caps. I want to talk about the other leg of that thesis, which is what happens with large caps. Do they necessarily just lag, or how does this happen? Is this a bad news story for big tech, some of the big names that make up the large cap indexes, or is this really more about small cap strength?
Yeah, this is absolutely not a large caps catching down. This is more of a small caps catching up. Their performance has been so poor over the past couple of years that I think there is a lot of room to close that gap. We recently, though, came out with our house forecast for the S&P 500. We think we're going to end next year around 7,800. So quite a bit of upside still for large caps ahead, and that is a pretty out of consensus view. But it's more of a small caps catching up versus large caps catching down.
I do want to go back just to broader economic conditions, particularly given the holiday season and all of the expectations for consumer spending. How much of a factor will that be in the market's reaction? So, I mean, not just the aggregate level, but obviously when you adjust that for inflation, are we going to get a real sense here of just exactly what that spending condition?
Yeah, so I do think we're setting up for a softer period into the holiday season, but I think the market understands this really well. So you could see, if we have results that are better than feared, the market react quite positively. But we do run a proprietary consumer survey, and we found that consumers are planning to increase their holiday budgets less versus prior years. When we drill down to the category level, we're finding that consumers are planning to spend less on luxury goods, on home appliances, kitchen appliances, on tech hardware products. So these bigger ticket purchases, people are planning to pull back a little bit there. So I would expect, from the economic level, softer into holiday, but from an investor and an equity level, I think people do understand that story.
So I should expect to get a lot of socks and ties this year, is what you're saying?
No large screen TVs coming your way this holidays, unfortunately. I do want to go back to AI really quickly, because you point out in your notes that the key question that you're getting from investors right now is, are companies that are adopting AI actually seeing tangible benefits? And that feels like that's the existential question being asked of a lot of these leaders right now. So what's the answer?
So if I'm to think about the AI narrative, the broad AI thesis, it's really a 3-chapter story. So on the first chapter, you have the underlying technology. We're still fundamentally bullish on the underlying technology. The companies have assembled around 10x the amount of compute to train this next generation of models. So we do think we're going to see some very sophisticated models coming out. When we think about the second chapter from a market perspective, that's the AI enablers. That's the chip makers, the cooling players, the power players, everything that goes into setting up and running a data center. The returns have all been concentrated there. That's where the market's really been focused on the AI story. The last chapter, though, as you point out, is that AI adoption chapter, and I think there's some disconnect in people's minds between that first and third chapter. They're saying, these models are great, they're solving complex medical diagnostic problems, they're winning the Math Olympiad, they're doing great at computer programming exams. Where's all the benefits? But we actually found that for the S&P 500, as of the most recent quarter, 15% of companies are citing quantifiable benefits from AI adoption. That's up from 11% a year ago.
Wow. All right, Michelle, we have to leave it there. Have a wonderful weekend.
Thank you.
Michelle Weaver, U.S. thematic equity strategist at Morgan Stanley, with a nice high-level look at conditions in the markets right now. When we come back, we drill down into that real economy and talk about that intersection with Black Friday up ahead, some major retail earnings next week. We're going to take a deeper dive into that sector with Anthony Chukumba over at Loop Capital.
Plus, from deals to deal makers, we discuss how the private sector continues to heat up and what's next for private capital with Andrea Auerbach, Global Head of Private Investments over at Cambridge Associates.
And we're going to talk about what's been going on in the food space. We're going to talk to Eugene, Remm, the restaurateur, and we're going to talk to the co-founders of Levain. You eat these cookies, Katie Greifeld?
Yeah, big time. Today, even.
Did you? Oh, wow. Thank you. That's coming up next here on The Close on Bloomberg.
Bitcoin on track for its worst month since the crypto trade cracked back in 2022. Is this
got
just?
that right this time.
I did.
Good job.
I did. There is a little hyphen in there to help me. Anyway, is this a momentary pause on its path to $200,000? That's the view of Fundstrat's Tom Lee. Or is this risk-off action a broader warning signal? Let's discuss with Stacy-Marie Ishmael. She is executive editor over at Bloomberg. And you think back to 2022, there were a lot of very distinct bad things that happened when it comes to actual companies collapsing. What is the crisis right now? Is it really that bad out there?
I think one of the interesting things that we have to remember is while the declines are very large, the levels that we're talking about are really different, right? You know, we're down 25% in kind of October, November, but we are still way higher than we were a couple of years back, right? Like, you know, we hit a high of $125,000 in October. We're flirting with between 80 and 84,000 right now. You know, we started this cycle, this 4-year cycle, at much, much lower levels. So I would say as a restrained editor, we're not yet calling it a crisis, but as somebody talking to, you know, lots of folks and who has reporters talking to lots of people, there's certainly a feeling of it's unclear what is going to drive prices higher, where there are a lot of factors, particularly macroeconomic, that are really denting overall sentiment.
It's kind of interesting, too, because a lot of your reporters have tracked down very specific wallets and looked at some of the activity. What is that telling us, if anything, about why some of these sales are taking place?
So in terms of one of the things that really freaks people out in the crypto market is when what are called the OG whales, so the people who, you know, back when Bitcoin was like $1, bought very large quantities of it and then sat on those wallets for decades, when they start moving money, it like rattles people a little bit because it's the sense of what do they know that we don't know? Like, are they cashing out at what the perceived top is? And we have certainly seen a bit of an uptick in that this year. But the other, Casey, and this is very much your area of expertise, is the big difference between 2022 and 2025 is the existence of ETFs, and particularly ETFs that are crypto specific, whether it's Bitcoin or Ether or Solana or increasingly strange tokens. And that is, one, a retail product. Two, you know, has a lot to do with the particular dynamics of how ETF flows work and what things influence those. And three, like more correlated with like broader market sentiment because of how they tend to be sold and bought. And so now you're in this dynamic where if retail traders are unhappy, they're going to pull things out, you know, sort of across the board. And we have absolutely seen outflows from crypto ETFs in a way that is consistent with that collapse in retail sentiment.
Yeah, absolutely. You've seen some pretty big withdrawals just in the past week or so. But when it comes to broader market sentiment, of course, we've been keeping a close eye on what's going on with the AI trade. Romaine and I have been batting back the theory that crypto is a really pure way to measure risk appetite, given that it doesn't have cash flows. But how does it tie into what we're seeing with the AI trade and big tech overall?
Well, I mean, certainly you have, you know, the ongoing correlation, whether with like the Russell or the NASDAQ, in terms of the sense that this, you know, there are crypto companies that look like tech companies that look like fintechs, whether they are the Bitcoin miners or the Coinbases of the world. But more specifically, crypto is starting to be affected by the sentiment in AI, particularly because former crypto miners, you know, are rebranding as data center providers and are tapping the capital markets very aggressively in order to, you know, invest in the AI phenomenon. So if you have, you know, current crypto miners raising or attempting to raise billions of dollars either in debt or equity, that is very much going to be caught up in if there is a reduction in sentiment about like the AI trade and whether that has legs to run.
What's the correlation with Fannie Mae and Freddie Mac?
According to Bill Ackman, who posted on what I will still call Twitter, you know, he's seeing that there's a universe of people in his view that hold Fannie Mae and Freddie Mac and are selling those in order to fund the liquidations that they're facing in the crypto market. I think broadly speaking, it is true that risk assets are correlated. We haven't yet seen any specific evidence that there is like a universe of people out there who are like, oh no, I'm being hosed on my Ether positions. Let me sell GSEs.
All right, Stacy-Marie, always a great conversation, great insight. Stacy-Marie Ishmael, one of our executive editors here at Bloomberg, helps to lead our coverage in the crypto space. When we come back, we turn to the holiday shopping season. Traditionally, it kicks off on Black Friday, but if you've been paying attention to your email box over the last few weeks, you know it kicked off a long time ago. Anthony Chukumba going to join us after the break to give us his outlook for the holiday shopping season. This is The Close on Bloomberg. Let's get right to our top calls. Big movers on the back of analyst recommendations. We start off with Bath & Body Works. Telsey Advisory cutting the rating to market perform. The price target slashed by more than half, down to $17. Despite Bath & Body Works usually being a holiday shopping destination for consumers, the analyst says the recovery there is taking longer than expected. A 25% drop in the shares yesterday being added to with the 4% drop today. Next up, NVIDIA. Raymond James, the analyst over there, is reinstating his coverage of the tech giant with a strong buy and a 272 target that implies a 50% upside over the next 12 months. He says he believes in the chip maker, and he believes that chip maker is an AI leader and a core holding for investors. Those shares higher on the day, but we should point out they are down on the week. And finally, let's take a look at Ross Stores. Citi boosting its price target to 188 from 177, saying the retailer's comp sales were at the high end of what the bulls were expecting, which positions Ross as the new comp leader in the off-price space. That's a bold call, and well, it's a bold move in the stock, up 8% on the day, and those are some of our top calls. We do want to stay in the retail space as we are expected to get more earnings out of the retailers next week. Plus, we get the Black Friday holiday shopping season kickoff, at least as traditionally it goes. Someone who covers both of these joins us right now, Anthony Chukumba, the head of the consumer sector at Loop Capital Markets. And it's always hard to talk about Black Friday being the kickoff of the holiday season, because I feel like I've been getting promotional offers now, Anthony, for at least a month. I don't know, does that bode well, in your view, for what we should expect this holiday season?
I wouldn't really read in that much into that, to be quite frank. I mean, it seems like the holiday selling season has been getting longer and longer and longer, and retailers are starting earlier and earlier and earlier with their promotions. We don't necessarily get the sense that they're starting any earlier this year as opposed to last year. One advantage that they do have is that last year, you had 5 fewer shopping days between Thanksgiving and Christmas year over year. This year, you actually have 1 additional day. So I wouldn't necessarily read into the fact you've been getting all these promotional offers.
I want to talk about some of the companies underneath your coverage, including some of the ones that you are actually somewhat bullish on, including Best Buy, which reports next week. And traditionally, in the past, it's been a big beneficiary of the holiday shopping cycle. What gives you sort of faith here that Best Buy has sort of, I guess, refound its legs, if you will?
So in terms of the upcoming holiday selling season, a lot of it just has to do with product cycle. And I would point to 3 product categories in particular. First off, PCs. And PCs have been a good business for Best Buy for quite some time. I think that will continue because of the switch to Windows 11. So the second thing is smartphones, and we've seen very, very strong sales of the iPhone 17. We saw Apple increase their estimates in terms of how many units they think they're going to sell in the holiday quarter. That certainly bodes well for Best Buy. And the third thing is video gaming, and a lot of that is the Switch 2 from Nintendo. You just had Nintendo report really strong results for the first half of this year, and they actually increased not only their sales estimate, but their unit estimates for the Switch 2 as well as games. And so that all really bodes well for Best Buy in the holiday selling season.
Yeah, and Best Buy certainly could use some good news, down about 7% on a total return basis year to date. I want to talk a little bit about Five Below, because that's also a name you mentioned as one of your favorite long ideas heading into the holiday season there. Five Below, of course, it's one of those discount merchandisers. Talk us through the thesis there.
Sure, absolutely. So Five Below still has a relatively new CEO in Winnie Park. She is a merchant by nature, and their merchandising has gotten significantly better since she took over. I mean, they've brought in a lot more fresh merchandise. They're leaning much more into licensing, right? So earlier in the year, it was the Minecraft movie. Right now, it is Wicked for Good, which just came out this weekend. I think next year it's going to be K-pop Demon Hunters. Remember that I said that. In addition to that, they took price adjustments on 15 to 20% of their merchandise assortment. That was really price increases, and that will help them not only with comps, but also to offset the Trump administration tariffs. And then finally, they actually have a pretty easy year-over-year comparison. Their comp store sales were actually down 3% in the fourth quarter of last year, and that was largely due to the fact that they were a little bit too cautious in terms of ordering inventory for the holiday selling season. So they will benefit from that easy comparison this year.
We should also point out, Katie Greifeld and Anthony, Five Below has the best variety and selection of Haribo gummy bears on the face of the earth, just so you know.
I didn't know that, but I have heard that you do like gummy bears, so there you have it. It's interesting, Anthony, though, when it comes to Five Below, you might be tempted to lump them in with a Dollar General, a Dollar Tree, for example. You cover both of those names, though, and you have them at a hold. So why do some of those factors not necessarily translate over to the dollar stores?
That's a great question. I mean, look, to be clear, you know, the dollar stores in many ways, particularly Dollar General, they're just like small supermarkets, right? I mean, just think of, you know, a lot of the same type of products you'd find at a Walmart in the grocery section, but in a much smaller store. I mean, Five Below is very different. Five Below is a lot more discretionary merchandise. Five Below is very, very much targeted towards teens and preteens. So it is a little bit different. And to be perfectly honest with you, I mean, you saw these Walmart numbers, and one thing that Walmart talked about in the third quarter, even though they had a overall pretty good quarter, is that they saw some weakness in that core low-income consumer. And that gives me a lot of pause about Dollar General and Dollar Tree in the near term.
All right, Anthony, that's a good place to leave it. Great to get some time with you. Have a great weekend when you get there. That is Anthony Chukumba. He is head of the consumer sector over at Loop Capital Markets. And it's a good point. You know, you go to a Five Below, which it sounds like you're very well acquainted with.
It's one of my favorite stores.
They have a really fun selection of items, a lot of tchotchkes and different sort of inventory than a dollar store, for example.
I've never actually been outside where the candy department is, which is near the front, so I wouldn't know. But yes, from the part that I've seen.
A single issue shopper when it comes,
that's right,
of course, to Five Below. Now, coming up, we're going to switch gears a little bit. Some of the most powerful people in finance sounding the alarm on private markets. We'll dig into the risk-reward of this exploding corner of the market with Andrea Auerbach of Cambridge Associates when we return. That conversation up next. This is The Close.
.30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Katie Greifeld. We're keeping a close eye on these public markets, but also, too, on private markets, Romaine. We've seen plenty of worrisome signs and a really interesting episode with Blue Owl trying to merge those two funds and then calling it off.
Yeah, interesting, too. And we always talk about, you know, we talk about the burgeoning sort of private market industry. But remember, I mean, these were companies, at least with the private credit firms, that were basically middle America, right? I mean, they always talk about that. They're the middle market lenders out there. And so the companies that they have under their belt, I mean, to a certain degree, they are going to be barometers of the economy. And people want to know how those companies are doing.
Yeah,
and
absolutely.
It depends on, I guess, how they're doing depends on who you ask.
That's true. Well, you have billionaires sounding the alarms on private markets, of course. We also heard from Jeffrey Gundlach on the Odd Lots podcast earlier in the week. But you think about firms like Blackstone and Robinhood trying to ease access to that corner of investing to maybe more the retail investor, the self-directed investor. So let's unpack the growth of this space with Andrea Auerbach. She is Global Head of Private Investments over at Cambridge Associates. Andrea, it's great to have you with us. You think about this push to open up these private markets to retail. I wonder if the retail investor just watching the headlines and trying to keep pulse of the news, hearing warnings about cockroaches and everything else, whether or not that might put a damper on some of this demand from that investor base.
Yeah, Katie, a great question. And I think what we see is that the retail investors are looking for sources of return and diversifying sources of return, perhaps away from the more traditional places that they've been able to invest over the years. And so the private markets, which have primarily been available to institutional investors, are now starting to open up and attract more retail and individual investor capital. And it's a source of diversification into the private economy and into all the businesses up and down the full private economy stack. But there are some concerns around that, right? Private equity is private and it's liquid. And so it does create more questions that an individual investor needs to ask themselves before they decide to make that investment.
Yeah, absolutely. And you think about the case this week when it comes to those two Blue Owl funds that were set to merge, and eventually that was called off because the investors in the private fund, in merging with the public vehicle, would have then had to sell their holdings at a loss. And you think of those experiences and you think about the avenues in which these retail investors might be able to invest. I wonder how you think about what that exposure should look like when it comes to fund structures, for example.
Absolutely. And what we're watching is on the institutional side of the private markets, which has really been institutionalized. I think we're in our 4th or 5th decade at this point. There's a very traditional and expected lockup structure that is very common that an institutional investor has become very accustomed to. But in order for an individual investor to perhaps access the private markets, there are different vehicles that have been increasing in launch and in popularity. For example, there have been over 100, on average, there's been over 100 evergreen or interval or retail vehicles launched every year for the last 5 years. And those evergreen vehicles are structured differently, work differently, may provide interim liquidity very differently. And these are different elements that an individual investor has to educate themselves on.
Well, I am curious, too, as we start to see the more of the rollout of these products, Andrea, is this going to be a sense of the individual investors, the retail investors, basically buying into the broader fund, or will they get a crack and maybe buying into the actual individual company or issue, if you know what I mean?
It's a great question, Romaine, and I think it's a little bit of all flavors, right? So some of these evergreen vehicles are offering access directly into private companies at different layers of the economy. Other vehicles are offering access to funds that then turn around and invest in different layers, also into secondary funds, which have become a fairly popular strategy with institutional investors, particularly over the last couple of years.
This gets also to this idea of liquidity, and it looks like, at least when you talk to the folks in the personal finance space, the real thing that people are going to have to be educated on. I mean, when I look at my own retirement savings over the years, I've never really had a point in my life where I ever had to worry about getting access to my money if for some reason I did want to take it out earlier than planned. That's going to be a lot different once we start putting private equity and private credit assets in those portfolios.
Absolutely, Romaine. And part of how we're watching the democratization of the private markets appear on the landscape is through, say, within a 401k or a defined contribution program, perhaps more through target date funds, which offer a little bit, shouldn't say it quite like this, but set it and forget it, right? You're not going to need access to that portion of your target date fund that is illiquid until it realizes and those returns come back to you. So you're absolutely right. Individual investors need to remember the average hold period for a private investment is 7 years. So if you're going to invest in this space, hopefully you don't need to access that before its sell date.
Yeah, it's a good point that this is a long-term relationship that you're theoretically entering into, Andrea. And you think about where we are in the year, where it's November 21st, we are counting down to the holidays. What's the outlook as we head into 2026? It feels like 2025 was a really important year in terms of starting and continuing the conversation when it comes to access. But when it comes to the actual fundamentals of the private markets, what are you expecting to see next year?
Katie, in order to look ahead, just quickly looking back at 2025, it's been a low point for distributions back to institutional investors. It's been a low point in terms of institutional fundraising. There's a lot of trapped capital that needs to get realized so that allocators, institutional investors, will return to these markets. And in order to develop those distributions and those returns, the sponsors, the managers who have made those investments need to realize those investments. And so, looking forward to 2026, we believe the private markets have troughed. We believe 26 will be better than 2025 in terms of exit activity. We believe 26 will have more fundraising activity than we saw in 2025. And we think allocators and managers are going to start getting on with the business of investing productively so that they can earn the returns they need to keep going with their various initiatives.
I'm curious on the fundraising side, though, Andrea. I mean, if you talk obviously to anyone in this space right now, at least here in 2025, fundraising has been very difficult, certainly if you're not trying to fundraise for something that's directly related to AI. Does that fundraising broaden out? Not just that in aggregate it's going to be higher, or at least higher than current levels, but that it will be into things that aren't just, again, whatever the newfangled AI wrapper is out there.
Right. Romaine, actually, 2025 was a bit of a bright spot. To your very point, there was a lot of capital going into AI and ML-based investing, true. Secondaries as a private market strategy also was very popular this year from attracting capital in 25, as was private credit. So I think 26, I think what you're going to see is a return to a little bit more broad-based fundraising in terms of classic private equity managers, growth equity managers, and other sectors looking to raise capital productively, because a lot of money's been on the sidelines for a few years at this point. And we need to keep earning those returns to fuel all the initiatives at the institutions that we serve and families that we serve at Cambridge Associates.
All right, Andrea. Well, obviously, you and your team, obviously the best in the business out there, and we appreciate you taking time for us today. Andrea Auerbach is Global Head of Private Investments at Cambridge Associates, as we continue to count you down to the closing bells here on this Friday afternoon. And Friday afternoon means it's time for Chris Kane and Factor Friday, a roundup here of the big factors that drove the market this week. That's coming up next here on The Close on Bloomberg.
If I can get prices down.
We have some breaking news coming out of Washington right now. The President of the United States, Donald Trump, meeting with New York City Mayor-elect Zohran Mamdani down at the White House. Let's take a listen.
Said that Thanksgiving this year is exactly 25% less than last year, so that's good for New York, good for everybody. But I just want to congratulate. I think you're going to have hopefully a really great mayor. The better he does, the happier I am, I will say. There's no difference in party. There's no difference in anything. And we're going to be helping him to make everybody's dream come true, having a strong and very safe New York. And congratulations, Mr. Mayor.
Thank you, Mr. President.
Thank you.
I appreciate it.
Please.
I appreciated the meeting with the President, and as he said, it was a productive meeting focused on a place of shared admiration and love, which is New York City, and the need to deliver affordability to New Yorkers, the 8.5 million people who call our city their home, who are struggling to afford life in the most expensive city in the United States of America. We spoke about rent, we spoke about groceries, we spoke about utilities, we spoke about the different ways in which people are being pushed out, and I appreciated the time with the President, I appreciated the conversation. I look forward to working together to deliver that affordability for New Yorkers.
Thank you very much. Any questions, please?
President Trump, Stephen Nelson from the New York Post. I've got a question for you and then also one for Mayor-elect.
Sure.
For you, you referred to Mr. Mamdani as a communist. Can you describe why you feel that way? And also, will you do anything to stop him from arresting Prime Minister Netanyahu if he visits New York?
Well, we didn't discuss your second part of the question. And on your first part, I mean, he's got views that are a little out there, but who knows? I mean, we're going to see what works, or he's going to change also. We all change. I changed a lot. From when I first came to office. It's now quite a while ago. It's quite a while. My first term was great. We had the greatest economy in the history of our country. We're doing even better now. We're doing much better now than we did even the first term. And I can tell you some of my views have changed. And we had discussions on some things. I'm not going to discuss what they were, but that I feel very confident that he can do a very good job. I think he's going to be. I think he is going to surprise some conservative people, actually, and some very liberal people. He won't surprise them because they already like him.
And Mr. Mamdani, it sounds like you had a productive discussion, but just days ago you referred to President Trump as a despot who betrayed the country. You said you'd be his worst nightmare and accused him of having a fascist agenda. Are you planning to retract any of these remarks in order to improve your relationship?
I think both President Trump and I, we are very clear about our positions and our views, and what I really appreciate about the president is that the meeting that we had focused not on places of disagreement, which there are many, and also focused on the shared purpose that we have in serving New Yorkers. And frankly, that is something that could transform the lives of the 8.5 million people who are currently struggling under a cost of living crisis, with 1 in 4 living in poverty. And the meeting came back again and again to what it could look like to lift those New Yorkers out of struggle and start to deliver them a city that they could do more than just struggle to afford it, but actually start to live in it.
And I've been called much worse than a despot, so it's not that insulting. Maybe I think he'll change his mind after we get to working together. Yes, please.
Mr. President, Anthony Chukumba from MTV Lebanon.
Good.
I would like to ask you a question about the Middle East regarding
Sure.
you said that Hezbollah in Lebanon is not in a good position. And Lebanon now is the final unresolved after Gaza and Syria. Given your assessment, like, what do you say for the Lebanese today? It's in the independent state of Lebanon. And what is your next move to push toward disarmament?
Sure. Well, we are pushing for total disarmament of Hamas and, frankly, everybody else. And we actually have peace in the Middle East. As you know, the King of Saudi Arabia just left yesterday. We had some great meetings, and he's made a contribution toward the United States of more than $1 trillion. We have now over $20 trillion coming in. No country has ever had anything like that, not even close. If you go to 2 trillion or 1 trillion, it's a lot. We have 20 or $21 trillion. I think that Hezbollah has been a problem in Lebanon, big problem. We're working with Lebanon. We're working with everybody in the Middle East. That's another thing I think we have in common. We want to see peace in the Middle East, and we actually have now, for the first time, peace in the Middle East after 3,000 years. And now we're going to refine it, and I think you're going to see some very positive things happen.
There is a potential to invite the Lebanese president.
Oh, sure. Oh, I would do that, absolutely. And if the mayor would like to be here for that meeting, because I know he feels very strongly. I think you feel very, very strongly about peace in the Middle East. I think
we desperately want it, and that's something that I shared with the president, that when I spoke to New Yorkers who had voted for the president last November on Hillside Avenue and Fordham Road, I asked them why. I heard again and again 2 major reasons. One was that they wanted an end to forever wars. They wanted an end to the taxpayer dollars we had funding violations of human rights, and they wanted to address the cost of living crisis. And I appreciated the chance to discuss both of those things.
He said a lot of my voters actually voted for him, and
1 in 10.
And I'm okay with that. I'll do that. I'll sign it. Give it to me. I'll sign it in a minute. That's pretty good.
Mr. President,
Yeah, please.
You threatened to send federal troops to New York City. You both have differences when it comes to ICE agents in New York City. Mr. McDonald, you called ICE a rogue government entity. I wonder how you reconcile your differences on both of those issues.
Well, I think we're going to work them out, and I think that if we have known murderers and known drug dealers and some very bad people, you know, we want to get them out. And the mayor wants to have peace. We discussed this at great length, actually, maybe more than anything else. He wants to have a safe New York. Ultimately, a safe New York is going to be a great New York. If it's not safe, no matter how well we do with pricing and with anything else, we can talk about anything you want. If you don't have safe streets, it's not going to be a success. So we're going to work together. We're going to make sure that if there are horrible people there, we want to get them out. I think he wants to get them out, maybe more than I do. So we'll work together. We discussed it at great length. Yes, please.
Yeah, 2 questions, if I may. One for you, Mr. President, from BBC in a second. But first of all, for the mayor-elect. You're both from different parts of the political spectrum. You're both populists, though. And I just wondered to what extent the president's campaign style, his techniques, his social media use inspired any part of your campaign.
Well, I actually told the president that, you know, so much of the focus of our campaign has been on the cost of living crisis. And when we asked those New Yorkers who had voted for the president, when we saw an increase in his numbers in New York City, that came back to the same issue: cost of living, cost of living, cost of living. And they spoke about the cost of groceries, the cost of rent, the cost of Con Ed, the cost of childcare. And too often, politicians are looking to lecture to New Yorkers what they should care about, as opposed to listen. And when we spoke to those voters who voted for President Trump, we heard them speak about cost of living. We focused on that same cost of living, and that's where I am really looking forward to delivering for New Yorkers in partnership with the president on the affordability agenda.
And if I may,
And I think we have to work a little bit. We talked about Con Edison. We have to work a little bit on getting the prices because, we've gotten fuel prices way down, but it hasn't shown up in Con Edison. And we're going to have to talk to them. If we're sending them fuel at a much lower price than it was a year ago, which is true, we have to get Con Edison to start lowering their rates.
Absolutely.
And if I may, last week you told me you were pushing ahead with your plans to sue BBC for up to $5 billion. You're going to speak to Prime Minister Starmer as well. Is there any progress or any updates on those issues?
Well, we get along very well with the Prime Minister. We made a deal with UK. I like him. He's a fine person. And, I think they have some big energy problems. They've got windmills all over the place. They're going to have to start using other methods because their energy is out of control. Talking about in the UK, it's out of control. And he's got that problem. He's got a big immigration problem, as you know, and he's got a big energy problem. And we talk about it. He's a good man. Prime Minister's a good man.
You had a chance to speak this week.
I haven't spoken this week.
Mr. President, have you spoken to President Zelensky, or do you intend to
Who?
President Zelensky about your plan? Are you going to meet with him?
I've spoken with their people. We have a plan. It's horrible what's happening. It's a war that should have never happened. It would have never happened if I was president, and it's a shame. And I thought they should have acted quicker. But it's a cold winter, and a lot of the you talk about utilities, but a lot of the big energy-producing plants have been under attack, to put it mildly, to put it nicely. We have a way of getting peace, or we think we have a way of getting peace. He's going to have to approve it. Just so sad, so many people. Last month they lost 25,000 soldiers. This is something, we haven't seen anything like this since the Second World War. And they're averaging 6,000 or 7,000 a week between the two of them, dead soldiers. And it goes on, and I think they're getting reasonably close, but I don't want to predict. I would have said that would have been one of my early ones. I did 8 peace deals of countries, including in India, Pakistan. You could even go, in fact, they're coming here in a week or two, go to the Congo and Rwanda. That was 10 million people dead, and we worked something out on that. But so many, and the one I thought would have been, for me, because I have a very good relationship with President Putin, I thought that would have been maybe quicker. But it does take 2 to tango. And now you just see all the death. And, it doesn't affect us other than the fact that we don't want to see all those people that really, it's on the other side of the ocean. It's a war that should have never happened. It did happen. I blame the person also sitting right behind this desk. This is a war that should have never happened, and it wouldn't have happened if I were president. But we're trying to save a lot of lives. They're losing 25,000 lives over the last short period of time. That's Ukrainian and Russian, and it's a shame.
What happens if President? I want to ask the mayor-elect about a House resolution just passed overwhelmingly to condemn socialism, including with 86 Democrats, all of House Dem leadership, and the minority leader, Hakeem Jeffries, despite his endorsement of you. What's your reaction to that?
I have to be honest with you, I focused very little on resolutions, frankly. I've been focusing...
Socialism.
I understand. I think the focus is on the work at hand. I can tell you I am someone who is a democratic socialist. I've been very open about that. And I know there might be differences about ideology, but the place of agreement is the work that needs to be done to make New York City affordable. That's what I look forward to.
And I want to clarify your answer to Stephen Nelson. He asked about your comment calling the president a fascist. And your answer was, both President Trump and I have been clear about our positions and our views. Are you affirming that you think President Trump is a fascist?
I've spoken about...
That's okay. You can just say yes. Okay. It's easier. It's easier than explaining it. I don't mind.
And President, I wanted to ask you also about this Ukraine plan. President Zelensky said today that his country would risk either giving up a partner or giving up its dignity. There's been criticism that this deal...
You mean he doesn't like it?
It's unclear. He was sort of pretending...
He'll have to like it, and if he doesn't like it, then, they should just keep fighting, I guess,
The suggestion that you made, though, was that if he doesn't accept it, that the U.S. would pull back its support for Ukraine.
Well, at some point he's going to have to accept something. He hasn't accepted. You remember right in the Oval Office not so long ago, I said, you don't have the cards. Don't forget, I inherited this war. This war never would have happened. I inherited this war. And I thought he should have made a deal a year ago, 2 years ago. The ultimate deal would have been if it never started. That would have been the good deal. That could have been done too if you had the right president, but you didn't have the right president.
Mr. President, cost of living is something that you and Mr. Mamdani seem to agree on.
Right.
Democrats have run New York City for a long time, Mr. Mamdani. Do you see Democrat policy specifically as being a problem? And I'd like that to be a question that both of you could answer in New York City.
Look, I think that there are many things in our city where we have to own the responsibility of it, things that existed long before the president was the president. And those are also part of the message of our campaign, was to take on a broken politics of the past. And I ran against a number of candidates who represented different versions of that past. And what we found time and again is that working people were left behind in the politics of our city. And what we're looking to do is put those people right back at the heart of our politics so that we don't have a situation where we're in the wealthiest city in the history of the world, and yet 1 in 5 can't even afford $2.90 for a Metro card.
You know, we had some interesting conversation, and some of his ideas really are the same ideas that I have. But a big thing on cost, you know, the new word is affordability. Another word is just groceries. You know, it's sort of an old-fashioned word, but it's very accurate. And they're coming down high. They were, you know, we had, both of us, we had the highest inflation in the history of our country the last 4 years under the Biden administration. And we've got inflation down now to a normal number. It's going to go even a little bit lower than that. Katie, do you have something in a bit?
Mr. President, thank you so much. Mr. Mamdani often talks about New York City being covered by international law, that they will follow international law. Doesn't often talk about the U.S. Constitution. What is your response to that?
Well, I don't know what you're referring to in terms of it could be covered by international law, local law. It's covered by a lot of laws, but it's covered by U.S. law. Are you referring to anything in particular?
He just says that they're a city that endorses and enforces international law. Is that at odds with?
No, I don't know. Would you want to? Do you want to respond?
Yeah, I think what I've shared with the president is our desire to not only follow the laws of our own city, laws that protect New Yorkers, but also a desire for consistency in our politics across the board. And that's something that we've talked about and something that I know many New Yorkers want. We discussed ICE and New York City, and I spoke about how the laws that we have in New York City allow for New York City government to speak to the federal administration for about 170 serious crimes. The concerns that many New Yorkers have are around the enforcement of immigration laws on New Yorkers across the 5 boroughs, and most recently we're talking about a mother and her 2 children, how this has very little to do with what that is.
What we did is we discussed crime. More than ICE per se, we discussed crime. And he doesn't want to see crime, and I don't want to see crime. And I have very little doubt that we're not going to get along on that issue. He wants to, and he said some things that were very interesting as to housing construction, and he wants to see houses go up. He wants to see a lot of houses created, a lot of apartments built, etc. And you know, we actually people would be shocked, but I want to see the same thing.
Mr. Mamdani, anti-Israel protesters.
Jack?
Mr. President, I want to know one of the policies as well that Mayor-elect Mamdani talked a number of times about on the campaign was shifting the tax burden for property taxes from what he called minority communities to white-based communities and putting more taxes on white people. I also noticed that in your acceptance speech you didn't mention anything about America or Christians or white people in general, and so I didn't know if that was one of the policies that you guys had spoken about.
We focused on affordability. We focused on the cost of living crisis. What I will say is that I am very much interested in property tax reform, because what we see right now in New York City is a system that is so inequitable that it can't even stand up in court. And the president and I spoke about the importance of not only building more housing, but also making sure that regulation of housing is something that is manageable to actually get through and not the cause of yet another weight that we see in our city.
To be clear, you're continuing this idea of race-based property taxes.
No, to be very clear,
that's what you said.
No, the use of the term was a description of neighborhoods, not a description of intent.
So you intend to tax the whiter neighborhoods more?
No, we intend to create a fair property tax system because we want a New York City that is not only fair and equitable, but also one that every New Yorker can afford.
Mr. Mamdani, anti-Israel protesters
Please, God.
Mr. Mamdani, anti-Israel protesters just targeted a synagogue in New York. Are you concerned about Jewish New Yorkers feeling welcome and safe in the city? And President Trump, you threatened to cut off federal funding to New York City. What policies would prompt you to do that? Would that be city-run grocery stores? Would it be something else?
Well, I think if we didn't get along, whether it's cut off or just make it a little bit difficult or not give as much, we want to see, I use the term, we don't want good money going after bad. And we don't want that to happen. I don't think that's going to happen. I did say that, subject to what policies are being set. We had a meeting today that actually surprised me. He wants to see no crime. He wants to see housing being built. He wants to see rents coming down, all things that I agree with. Now, we may disagree how we get there. The rent coming down, I think one of the things I really gleaned very much today, he'd like to see him come down, ideally, by building a lot of additional housing. Yeah. That's the ultimate way. He agrees with that, and so do I. But if I read the newspapers and the stories, I don't hear that. But I heard him say it today, and I think that's a very positive step. No, I don't expect. I expect to be helping him, not hurting him. A big help, because I want New York City to be great. Look, I love New York City. It's where I come from. I spent a lot of years there. Now I'm right here. We took a big setback with the mayor that we had, Dave de Blasio. I thought it was a tremendous setback for the city. I think this mayor can do some things that are going to be really great.
Mr. President.
Okay, how about you? Go ahead, please.
You're a billionaire. You have a different address nowadays than you used to, but you used to call New York City home. Would you feel comfortable living in New York City under a Mamdani administration?
Yeah, I would. I really would. Especially after the meeting. Absolutely.
What makes you comfortable?
We agree on a lot more than I would have thought. I think I want him to do a great job, and we'll help him do a great job. He may have different views, but in many ways, we were discussing when Bernie Sanders was out of the race, I picked up a lot of his votes, and people had no idea, because he was strong on not getting ripped off in trade and lots of the things that I've practiced and been very successful on. Tariffs, a lot of things. Bernie Sanders and I agreed on much more than people thought, and when he was put out of the race, I think quite unfairly, if you want to know the truth, many of the Bernie Sanders voters voted for me. And I felt very comfortable, frankly, in seeing that and saying that. And, it just turned out to be a statistical truth. But, no, I feel very comfortable. I would feel very, very comfortable being in New York, and I think much more so after the meeting. Yes, please.
Thank you, Mr. President. I have a question for you, but a very quick one for the mayor. Why did you fly here? Aren't trains greener?
I will use every form of transit, and I want to make sure that they're all affordable in New York City, and that's why making buses fast and free is a centerpiece of our campaign.
There is a bus that goes.
Well, but I know, but if he flew, that's a lot quicker too. He's working very hard. For him to be, that's a very long drive. I'll stick up for you. The plane takes you 30 minutes, and driving takes you a long
Mr. President, I was wondering if you could clear up some confusion around a Washington Post report. There was this explosive report that the Coast Guard is no longer going to characterize swastikas and nooses as hate symbols. DHS called that a lie and fake news. Can you clear up?
I don't know anything about it. When was this written?
I think yesterday.
Well, look, the Coast Guard's an incredible group of people. I know them very well. We just ordered a lot of new Coast Guard cutters, beautiful, the most magnificent ship. They look like yachts with lots of guns on them. So I don't know. I haven't seen any report like that, but certainly we want them to remain a great force, and they are.
Mr. President, and you did the piece in all the 9 months around the world. I would like to ask Mr. Mamdani, you've accused the U.S. government of committing genocide in Gaza while President Trump was working on peace. Why that?
I've spoken about the Israeli government committing genocide, and I've spoken about our government funding it. And I shared with the president in our meeting about the concern that many New Yorkers have of wanting their tax dollars to go towards the benefit of New Yorkers and their ability to afford basic dignity. And what we see right now is we're in the 9th consecutive year of more than 100,000 school children being homeless in our city. And there's a desperate need not only for the following of human rights, but also the following through on the promises we've made New Yorkers. And I appreciated the meeting we had and the work that we can do.
Do you agree that President Trump did do a peace and work hard to make the peace? Because he worked hard to do the peace in the Middle East and everywhere.
Do you agree with that?
I appreciate all efforts towards peace, and I shared with President Trump that when I spoke to Trump voters on Hillside Avenue, including one of whom was a pharmacist that spoke about how President Trump's father actually went to that pharmacy not too far from Jamaica Estates, that people were tired of seeing our tax dollars fund endless wars. And I also believe that we have to follow through on the international human rights, and I know that still today those are being violated, and that continues to be work that has to be done no matter where we're speaking of.
Mr. President, thank you, Mr. President. Do you view the mayor-elect as the true leader of the Democrat Party? And do you think Leader Schumer's and Leader Jeffries, have to follow his lead?
Well, look, I hope they have great leaders. This is a man that right now I think is focused on New York City. I really think he has a chance to do a great job. We're going to help him, but I really think he has a chance to do a great job. But I'll let you answer that. You consider yourself the leader of the Democrats? I think it's more appropriate for him.
I consider myself the next mayor of New York City, and I keep my horizons firmly on New York City, and I appreciate the meeting with the president, which focused again on the 5 boroughs and whether New Yorkers could afford to live there.
By the way, being the mayor of New York City is a big deal.
Absolutely.
I always said, one of the things I would love to be someday is the mayor of New York City. Being the mayor of New York, and especially now, because I think you're at really a turning point, one way or the other. It could go great, or it can go in a different direction. And I think you really have a chance to make it great. I appreciate what counting on.
Mr. President, you say you love New York City. Mr. Mamdani, does New York City love President Trump?
New York City loves a future that is affordable. And I can tell you that there were more New Yorkers who voted for President Trump in the most recent presidential election because of that focus on cost of living. And I'm looking forward to working together to deliver on that affordability agenda.
I got a lot of votes. One more. Go ahead. 1 or 2 more. Go ahead. I tell you, the press has eaten this thing up. I've had a lot of meetings with the heads of major countries. Nobody cared. This meeting, that you people have gone crazy. Outside you have hundreds of people waiting. This is just a small little group. For some reason, the press has found this to be a very interesting meeting. The biggest people in the world, they come over from countries nobody cares. But they did care about this meeting, and it was a great meeting. Go ahead.
Yeah, Mr. President, I was going to ask you exactly that. Why do you think there's so much more, so much excitement around this than in some form?
Because I think he's different. All right? I think he's different, and that can be in a very positive way, but I think he's different than, your typical guy, runs, wins, becomes mayor maybe, and nothing exciting. Because he has a chance to really do something great for New York. New York is at a very critical point. And he does need the help of the federal government to really succeed, and we're going to be helping him. But he's different than, your average candidate. Hey, he came out of nowhere. I said he has a great campaign manager standing over there. He came out of nowhere. What'd you start off at 1 or 2? And then I watched. I said, who is this guy? He was at 1, then he was at 3, then he was at 5, then he was at 9. Then he went up to 17. I said, that's getting a little bit interesting, right? And then all of a sudden he wins a primary that nobody expected he was going to win. It's a great tribute. I mean, it's an amazing thing that he did.
And I'll just add one thing to what the president said. Is one thing I also appreciated is in our meeting to appreciate a portrait of FDR and the incredible work that was done with the New Deal, and also in thinking about what it can look like when the federal government and New York City government work together to deliver on affordability. It can be transformative.
We have a great portrait of FDR that I found in the vaults that was missing for years. I found it, and I put it up. He's a Democrat, to the best of my knowledge. He's a Democrat. And when the mayor saw that portrait, he said, sir, do you mind if I have a picture taken by that portrait? It's an amazing portrait. I hope the picture comes out good. But it's an amazing portrait in the cabinet room. So he's a big fan of the New Deal, I guess, and of FDR. Yes, ma'am.
Thank you, Mr. President. You said that you both spoke about crime.
Yeah.
There are many police officers set to come off the rolls at the end of this year in New York City. Are you going to allow those police to be replaced with police officers, actual cops? And are you going to require that that happens? Would there be some consequence?
Well, I hope it happens, but again, that's going to be ultimately the mayor's decision.
What's your answer?
is that I look forward to delivering public safety with the NYPD, and I've said over the course of our campaign that we have the number of police officers today. They are the ones that's budgeted about 35,000 headcount. And I think the key thing is that we have to make it easier for police to focus on police work, not ask them to respond to 200,000 mental health calls a year.
So is that a reduction from what you're at right now? Are you committing to maintaining the same level of cops?
I've committed over the course of the campaign to maintain the 35,000. That's the headcount that we had through the campaign.
And not replace them with caseworkers, social work.
No, I've said that's the headcount that we want. What we need to do is make sure they can focus on serious crime.
And he just retained a great police commissioner, I believe, right?
Yes, we did. Commissioner Fish.
If the newspapers are correct.
That one they're correct about.
He retained, I think, somebody that is she's a good friend of some of the people in my family, of Ivanka, and they say she's really good, really competent, and he just retained her, so that's a good sign.
Are there still topics that you see that you're disagreeing on in the future, and do you think you'll have more meetings like this?
There will be topics that we disagree on. I think we'll probably come to a conclusion, and ultimately he'll convince me or I'll convince him. You know, it's for the good of New York. Ultimately, it's for the good of New York. I don't care about affiliations or parties or anything else. I want to see if this city could be unbelievable, if he could be a spectacular success, I'd be very happy.
Do you think you guys will meet more in the future, too?
Excuse me?
Do you think you'll meet again in the future, throughout the administration?
I think we will. Yeah. I think we will. I hope we do. I enjoyed the meeting. We had a great meeting. Please.
Mr. President, Republican Elise Stefanik has campaigned multiple times by calling Zohran Mamdani a jihadist. Do you think you're standing next to a jihadist right now in the Oval Office?
No, I don't, but she's out there campaigning, and, you know, you say things sometimes in a campaign.
Isn't that sort of
She's a very capable person, but you really have to ask her about that. But I don't particularly. I think I met with I met with a man who's a very rational person. I met with a man who really wants to see New York be great again, and I can say again, because New York was great. You know, when I came down to Washington initially, the city was so hot. It was doing great. We were having some telltale signs of problems. We had a mayor that was not doing a great job, but still, it was moving along, and it went bad. It really went, pretty bad. And he can, I think it's been at lower points, but it went pretty bad. I think he can bring it back. Now, the question is, will he bring it back all the way? Will he bring it back greater than ever before, which is, I guarantee, that's his wish. I think he wants to make it greater than ever before. And if he can, we'll be out there cheering. I'll be cheering for him. Okay? Thank you very much, everybody.
You chose not to answer the question about sitting on the front desk.
Thank you very much.
Oh, no, I care very deeply about Jewish safety, and I look forward to rooting out anti-Semitism across the five parties.
The President of the United States in the Oval Office, sitting there right next to the mayor-elect of New York City, Zohran Mamdani. Still has about 41 days before he finally takes the oath of office. But, of course, meeting with someone who I think a lot of folks have assumed was going to be a primary nemesis, if not a thorn in the side, at least based on what we saw there live on television. A bit of a love fest with the president saying that he actually agrees on a lot more with Zohran Mamdani than a lot of people would have thought. He also says that, in his words, he met with a man today that is very rational and wants to see New York great again. Myles Miller is out on the lawn in front of the White House right now. You've been covering the Zohran Mamdani campaign for quite some time. And Myles, when this meeting showed up on the calendar, let's just say, I think a lot of us, to be fair, were expecting something a lot more contentious. What actually got into the water in these two men today?
Oh, I think the crisis of affordability was going to be the thing that brought them together, and that's what bore out in this Oval Office meeting. They agreed on getting housing built in New York City and bringing down prices. Anything I'm going to do, the president said, is going to be good for New York if those prices get down. Talking about the cost of living. Con Edison spoken about in the Oval Office. That's, of course, causing a dip in that stock by about 1%. I mean, this is the first time, likely, that Con Edison's been spoken in the Oval Office, but something very top of mind to New Yorkers, of course. Crime and public safety we knew was going to come up, but Trump saying if we have known murderers and drug dealers, it's essential to the city's success that they come up with a plan on that. Immigration, a big issue as well. But the meeting ending with an olive branch from Trump saying that he wants to be a big help to Mamdani, because if he's helpful to Mamdani, the city gets better, and he cares quite a lot about the city. The big nod from the president president, Mamdani picking Jessica Tisch as the police commissioner. He said she's friends, she knows his daughter Ivanka Trump pretty well, and that it's a smart decision to do. Let's see what this all means when Mamdani gets back to New York, and if federal funding will in fact stay intact.
Yeah.
And of course, the big thing, that security clearance, Trump has the keys to it.
All right, Myles, really appreciate the context. That is Myles Miller of Bloomberg News. Meanwhile, you take a look at these markets, how they finished up on this Friday. Quite a reversal from the past few days of selling. The S&P 500 closing about 1% higher. That is off the best levels of the session, but still quite a bounce back relative to the 1.6% loss on Thursday. Though, Romain, I will point out that the S&P 500 ending the week about 2% lower.
Yeah, pretty much all the major indices in the red. But what I do think is interesting about this is the outperformance. We saw relative outperformance of small caps, mid caps, equal weight index. Now, still in the red on the week, but their losses a fraction of what we saw in the major indices.
Yeah, very interesting. I mean, even on the day, to see the Russell 2000 finish 2.8% higher, quite the outperformance there. You take a look at the weekly performance for your small caps coming in at 0.8% lower. Third straight week of sellings, but to your point, you fared just slightly better there this week.
Yeah, continued weakness, though, in the tech sector with NVIDIA on the back foot. So, too, is crypto and a bit of a rotation into some of those other areas like healthcare and energy. Meera Pandit joins us right now. She's an executive director and global market strategist at JP Morgan Asset Management. And Meera, can you sort of explain what exactly happened this week? Because, I don't know, it started out like it was going to be a good week. We had, obviously, a lot of ructions in between. And then we end with this, I don't know if it's a buy the dip or a rotation rally today. I don't know what to call it. And there was a big options expiry that also distorted things a little bit. But pack it all together, and what does this tell us about what we should expect for the next few weeks?
It was a surprising reversal that we saw yesterday, and surprising volatility that we've seen overall, given the macro and micro developments that we saw this week. We had the final Mag 7 reporting very strong results. We had another retailer reporting very strong results, really underscoring the resilience of the underlying lower income consumer. And we had a jobs market that continues to produce jobs and show that there is demand for labor. So it was surprising because these are not just three positive data points. They are answers to some of the most pressing questions that we've seen and really rebuttals. Is AI a bubble? Is the labor market weakening? Is this K-shaped economy leaving us vulnerable in terms of growth? And what we saw is, frankly, good data points all around, but still some skepticism, and probably some healthy skepticism from the market that has run a long way over the course of the year.
So you felt like we did get some answers this week over a lot of the questions that had overhung this market. As we get into 2026, so we kind of push ahead over the next couple of months here, is there a sense that we'll see more upside catalysts for this market? And if so, from where?
We've just put together our 2026 outlook. And the theme is AI lift and economic drift, which is really a nod to the fact that the markets are not the economy is not the markets. So you may see an economy that muddles along, probably hot, then cold, then K-shaped, but you see AI that continues to propel markets. Now, it's not going to be in a straight line. We can't get used to the linear types of returns that we've experienced over the last couple of years, and this week is a good example of that. So do expect pockets of healthy consolidation. Perhaps we had a bit of a DeepSeek moment this week, but you continue to see after DeepSeek what happened, where the fundamentals around AI, when you think about earnings, valuations, the leverage and the financing of all of this CapEx, and of course the adoption and demand, still look fundamentally sound. So when we think about investing for the new year, we still want to focus on this AI theme, whether it's the AI innovators around tech, the AI enablers around utilities and industrials, and then further downstream some of those adopters. But if we want to think diversifying away from the AI theme and having a little balance in the portfolio for weeks like this, one of the areas we see a lot of runway in is financials, given the stellar results that we saw from an earnings standpoint this year. And again, given that relative insulation from the AI theme. Right. So you have both of those tracks working for you in a diversified fashion.
Well, I want to bring monetary policy into this as well, because it's probably no coincidence that you saw this bounce back on the same day that you had New York Fed President John Williams saying that he still sees room for a rate cut in the near term. One of the narratives for why you saw such a violent reaction to the downside to those that delayed jobs print, I'll point out, is that, you know, there's this idea that the Fed is going to hold in December, then who knows in 2026. I wonder what you're seeing when it comes to that side of things.
I wonder if it's too early for holiday music, but I think there's
never too early.
No place like hold for the holidays when we think about the Fed and the December decision, because we did see stronger job growth than was expected. Now, look, that uptick in the unemployment rate is a little bit concerning, even though you saw more workers join the workforce, because the question is, will they get absorbed? So we have to see how that continues to play out. But with the data that the Fed has, it seems like they may be on hold for December and then think through what they want to do next year, maybe cutting a little bit more at a gradual pace, perhaps no more than 2 to 3 cuts left for this cycle.
Wow.
Now, do I think that that had a big impact on the markets directly? Well, you came into this week and you came into the jobs report with less than 50% probability of a cut for December anyway. So I don't know that markets are upset about not getting this greater sense of easing, especially because we are closer and closer to neutral. I think the Fed will continue to gear towards that direction. And it's also clear from the financing activity within the bond markets and, of course, financial conditions more broadly that perhaps we don't need lower interest rates to continue to see success in the economy or markets.
Well, that's where I wanted to go, because say the Fed only is able to deliver 2 rate cuts next year, sort of at the low end of your range. You think about some of the areas of the market that you like when it comes to the AI trade, when it comes to financials. Do they necessarily need those rate cuts to deliver maybe some of the returns you're expecting?
I wouldn't think so, because AI in and of itself is not that rate sensitive of a trade, especially because a lot of the mega cap players are not tapping the debt markets out of necessity in order to finance some of this expansion in CapEx. And we've been living in a rate environment with rates above 4% for years now. And if you look at some of the surveys, I always like to point to the NFIB survey that looks at the top 10 challenges for small businesses, where interest costs would typically be a larger challenge than for larger companies, and that's way down the list. Quality of labor is the #1 challenge that remains, but it's not cost of labor, it's not interest rates, and so I don't think it's necessary. And I think you look at the credit markets, and they still look in a pretty good position overall. So when I think about that as an investor, you're getting that income. You want to be nimble around duration, given some of this uncertainty around rates, but you're getting the income, which is both yield and protection. So we like quality within investment grade, within municipals, within securitized, and then looking outside of the U.S. to the global bond market as well, where the fundamentals from a macro perspective are sound.
All right, Meera, great conversation. Really appreciate your time and patience on this Friday afternoon. That is Meera Pandit. She is Executive Director and Global Market Strategist over at JP Morgan Asset Management. Now coming up, the ripple effects of the market's risk-off mood extending to private markets. We'll check in with Jeff Aronson of Centerbridge Partners to see what his decades of experience in the space tell him about the path forward. This is The Close on Bloomberg.
In recent years, the garbage lending has not gone to the public markets. The garbage lending has gone to these private markets. And private credit has been very popular and is now increasingly been over-allocated to by large asset pools. The next big crisis in the financial markets is going to be private credit. It has the same trappings as subprime mortgage repackaging had back in 2006.
That is Double Line's Jeffrey Gundlach joining the chorus of concerns around private credit, as asset manager Blue Owl really feeling the heat this week, tabling plans to merge 2 of its private credit funds following criticism around the losses that its investors would sustain as part of the deal. Let's drill down into the mood of the industry with Jeff Aronson. He is co-founder and managing principal over at Centerbridge Partners. Jeff, great to see you in person.
Great to be here. Thank you.
So let's start with garbage lending, because Gundlach sees basically markets awash in that. And I'm curious, where you're sitting, what standards look like, whether you've seen any evidence that maybe due diligence is starting to slip a little bit.
There's always peaks and valleys of enthusiasm in any investment class, including lending. I think to call private credit and direct lending, garbage lending, is just a way overstatement. And I think people really have to step back and take a breath. It's like lending has been around forever. Direct lending, it's not that different than bank lending. It's non-bank lenders doing it rather than traditional banks, but there's nothing really new about it. And of course, people can get carried away. And of course, I think the direct lending market is $1 trillion or $1.5 trillion, some gargantuan number.
Right.
For people who say there's never going to be an issue, that is just wrong. Conversely, for people who think, oh, it's all going to come tumbling down, it's equally wrong.
Right. So it's an important perspective here, and it's important to take a breath, as you say. But what do you make of the narrative that, to Gunlock's point, that a lot of the problem children in the public markets, that's been shifted to the private markets, and that's one of the reasons why you've seen junk bond indexes, for example, maybe become a little less junky. Do you think that there's anything to that?
I actually don't. I think, again, it's a relatively new asset class in that it's non-banks. Firms like ours are making loans to private companies. But prior to us doing it, banks used to do it. So there's nothing new. But what always happens on Wall Street when there's a new idea, non-bank lending, people sometimes get carried away, and inevitably mistakes are made. But I think it's really important to look at the data. And I would analogize this to the syndicated loan market, which is probably the best comp to the direct lending market. And if you look back at 25, 30 years of data, the highest that defaults ever went is around 10%. And that was at the height of the GFC, in the midst of a crunching recession. Mm-hmm. Now, people say 10% on $1.5 trillion, that's a lot, and it is, and that actually can spell opportunity for creative investors.
Right.
But no one looks at it from the flip side. Even in the worst of times, 90% of the market is just fine.
What do actual recovery rates, at least based on what you know, what do they look like, particularly relative to what we saw in past cycles, potential recovery?
So if you look at the historical recovery rates on syndicated loans, first lien leveraged loans, it's around 60 cents in the dollar. Okay. Direct lending, predominantly, they're called unitranche loans. What does that mean? They're first lien senior secured loans. Now, who knows what the actual recovery rate will be? Maybe it's 60 cents. Maybe it's really bad. Maybe it's 40 cents. But again, just do the math. If you lend $1 million at the height of a recession, probabilistically, 10% will default. Okay? So your $1 million, you have $900,000, that is fine. And the balance, let's say your recovery rate is 40 cents in the dollar, not 60. So that's $940,000 on $1 million portfolio. So it's not to say that there aren't problems. Of course there are problems. But it's not like the whole world is going to come tumbling down.
It's not, and I agree with you with some of the extremes, I think, and some of the hyperbole we've seen in that space have gone a little bit far. But I do want to focus on some of those problems and the compounding effect that it's had on being able to raise new funds for new vehicles, to cash out on existing investments as well. Do you think we're going to start to see a little bit more grease, or for lack of a better word, liquidity in that space anytime soon?
I think when people calm down and take a breath, that people will realize that the world isn't going to end. I mean, there are always liquidity concerns, but that liquidity concern really has no bearing on whether the loan is actually worth 100 cents in the dollar. Now, your loan can be worth 100 cents, but if everyone wants their money out today, it's no different than an old-fashioned bank run, 50 or 100 years ago. You can't do it. So it has to come out slowly, but it has no real bearing on the value.
Has your job changed, meaning like the things you have to deal with on a day-to-day basis? Has it changed materially relative to a few years back because of everything that's been going on?
I think the primacy of private markets continues to grow, and we don't see that stopping. If you look at the direct lending market, $1 trillion, $1.5 trillion, the vast majority of it is directed to financing buyouts. It's sponsor-led financing. But if you look at the U.S., Wall Street, we're this much compared to the U.S. GDP. And so what we're thinking about is how do you bring direct lending solutions to that huge cohort of companies that have nothing to do with Wall Street and buyouts and private equity.
All right, Jeff, I wish you had more time. Always illuminating talking to you, getting a much better read of the state of private markets and the state of the economy with Jeff Aronson, co-founder and managing principal at Centerbridge Partners. Katie?
Meanwhile, U.S. consumer sentiment is under pressure, but is it impacting the restaurant sector? Conversation coming up with Eugene Remm. He is the co-founder and partner of Catch Hospitality Group. Up next, this is The Close.
All right, a little bit earlier today, we learned that U.S. consumer sentiment this month has been falling to its lowest levels on record, and that's impacting several sectors in the economy. including restaurants. It's a story we followed here closely on The Close, talking about the impact of everything, including GLP-1s, inflation, and other factors, with guests like Mr. Chow, the CEOs of Kava, the CEO of Starbucks, and with Eugene Remm. He's the co-founder and partner of Catch Hospitality Group, and we had a chance to catch up with him recently about his newest restaurant concepts, a little bit smaller, but just as critical, including one here in New York City called the 86. Here's what he had to say.
In the heart of the West Village, nestled between the brownstones on historic Bedford Street, is one of New York's hottest new restaurants, the 86.
It's the brainchild of Eugene Remm, the owner of the Catch NYC mega restaurant, and his partner Tillman Fertitta, the owner of the Landry's chain.
Their new project, though, couldn't be more different. An intimate steakhouse with just 10 tables, but enough star power to fill 100.
Where New York is going, and I think actually where the markets are going, is a simple situation of supply and demand. The only way, in my opinion, moving forward is to shrink the supply to increase the demand. And that's why we thought about these places. So when we look at restaurants in New York now, we look for iconic locations that are small in size so that we can create that intimate experience. That kitchen is about 15 feet from here. So this is almost like having dinner in a house with really nice furniture and 10 tables and a set of staff, but it's almost like bringing something so intimate into the restaurant setting.
How many square feet is this?
The entire space is 1,800 square feet. That's between both floors, but the actual footprint of what you see as a customer is only 900 square feet.
It's not Remm's first attempt at a small-scale, high-end, soon-to-be New York classic.
Just a little more than a year ago, he opened the Corner Store, an around 80-seat restaurant just a 15-minute walk from the 86 that has since become, hands down, one of the city's most coveted reservations.
This has been the best opening I've ever been a part of. The Corner Store was more nerve-wracking because it was a fully new concept with a fully new team. Now we've taken team members from there and brought them over here, so there's a much greater rhythm.
While the 86 undoubtedly draws aesthetic inspiration from the Corner Store, Remm sees it as a new endeavor in and of itself.
Even the building it's housed in, 86 Bedford Street, is oozing with history. The site of a legendary Prohibition-era speakeasy turned counterculture literary haunt, frequented by the likes of Hemingway, Fitzgerald, and Steinbeck.
The name 86 comes from the term 86, which during the 1920s, during Prohibition, when people wanted to sneak out the entrance, this was the back entrance at 86 Bedford Street. So when people were in there, they had a code called 86, and everyone knew to run out here.
Remm used the building's exterior as inspiration for its layout and decor.
This is a 1920s Art Deco design, and we're trying to think of how we pay homage to this space and its history, but give it its own feel. And I was sitting at home talking to my wife about what that should look like, and she was like, you should look at the Orient Express. And when we saw it, it really defined what that was.
And the Prohibition inspiration flows throughout the menu, with the restaurant's beverage program taking cues from 1920s tipples, precise martinis, and inventive cocktails.
When it comes to cocktails, though, are people still drinking cocktails and paying up for cocktails?
Cocktail culture is a big part of what's happening here in New York City. We are at the forefront of cocktail culture, the Corner Store specifically, the martini program, the idea of just not having a generic martini and making everything special. So everything we do is from scratch. We have an entire team that comes at 5 in the morning and they work on batching and creating the martini program, and that also translates to this space. So you're not getting anything that's just a traditional drink.
The recipe for restaurant success, though, is not without challenges and has been shifting fast. Take sustaining a beverage program in this day and age. A tall order as more Americans are drinking less. Data from the UN's Food and Agriculture Organization goes so far to suggest alcohol use may be in permanent decline, with beer consumption peaking in 2016 and wine consumption that's been on a steady decline since the 1970s.
People are drinking less. So people used to drink a bottle, now they may have a glass. They maybe used to have a glass, now they'll have a non-alcoholic beverage. So wine is a huge part of what we do, but in order to get the big wine sales, you have to provide all of the theater that comes around it.
Lower levels of drinking, along with the rise of GLP-1 weight loss drugs, means that restaurateurs have had to rethink traditional business models.
I have not come up with like the flat seating model yet, or the dynamic pricing model where if you want a table at 5 o'clock, it's going to be $300 if you want the table at 7:30. Just like when you go on a flight, if you want to go at 8 a.m. on Friday for a weekend to Miami, the flight is 3x what it is at Tuesday at 4 p.m. Restaurants don't have that yet, and I think it's coming.
Remm's long-running career in the restaurant business means he's had to navigate changing landscapes.
Catch was born in 2011, so the idea was always to create singular experience that connected nightlife with restaurants. So we were a nightlife group that did a little bit of restaurant, and somewhere around 2015, 2014, we pivoted to a restaurant group with a little bit of nightlife DNA. And from there, we expanded Catch from New York to Los Angeles to Las Vegas, then to our second concept, Catch Steak, which opened during the pandemic, and then we went on a spree.
And for Remm and Catch Hospitality, that spree continues.
Something that's very important for, I think, a business model is to cluster. So since we already have an amazing location in Las Vegas, we're planning on doing another one next year with the MGM group, because that's a big brand and it's a big team and we like it there. I think Dallas has also been incredibly successful for us, so we've been excited about the opportunity to expand that footprint. Scottsdale, again, only 6 weeks old, but it has just been received really well.
But it's tough to stay put in an industry that's seen peaks and pits. In the 6 months following the COVID-19 pandemic shutdown, nearly 1 in 6 eateries had long-term closures or shut down permanently, according to the National Restaurant Association. It's been a rocky recovery since, with restaurants facing higher labor costs, inflated food prices, and still disrupted supply chains. In the last year, eating out costs have risen 3.7%, according to the latest CPI data.
Up to 2019, every restaurant, didn't matter the size, it was packed, everything pre-COVID. COVID hit, disaster, 6-12 months, then you get the influx of all the free money and everything that comes with it. So you have the blowback of that. Welcome 2023, the hangover sets in, reality sets in that people have limited resources, that people don't want to be able to eat out as much. So then now you get into 23, 24, and 25, and every year you are starting to see that people are spending less, going out less, and doing less.
But Remm's thoughtfulness has helped him persevere and create special places rooted in one core ideology that every restaurant he's put on the market embodies.
Number one, you have to feel good when you walk in, and that's the people who work here. So they set the tone and the standard of what we do. Then we have to back it up with amazing food, and then the vibe. And the vibe in this scenario is some of the design, the lighting, the music, and everything else. And the key is being able to do all of those things equally well at the same time.
Thank you again to Eugene Remm. He is the co-founder and partner of Catch Hospitality Group. Loved that conversation, loved being in the restaurant. It's a shame I'll never get a reservation there.
Yeah, he's an intriguing guy, and yeah, that's probably definitely one of the hottest tickets in town, that one, and of course the other one, a corner store, which has been frequented, I'm told, by one of your favorite celebrities.
Taylor Swift, you know, she loves a good meal. So.
Yeah, I bet she can get in anytime she wants.
I think so. I think she has people to handle that for her. Let's take a look at some of the notable movers that closed out the week, because it is a Friday and markets are officially shut.
Yeah.
Alphabet, what a week for Alphabet, higher by about 8.5%.
We should also point out, I was kind of taking a look at this earlier, you know, Microsoft up until a couple days ago was the third largest company out there by market cap, surpassed today by Alphabet.
Yeah, there you go.
Yeah.
A changing of the guard. We'll see if that one sticks. Johnson & Johnson also having a fantastic week, actually closing at a record high for their 10th consecutive day of gains. They made an acquisition earlier in the week. Not so good of a week for NVIDIA, of course. We got those earnings. It was actually a beat and raise quarter, but markets unimpressed. NVIDIA shares finishing about 6% lower.
And of course, a big downdraft this week in crypto once again, and a big downdraft for Microsaylor's strategy. A 15% drop. This is the close on Bloomberg.
Rising food costs have pinched consumers, but our next guests aren't slowing down. In 2025, they expanded their bakery empire with 2 more stores for a total of 19 bakery locations around the U.S., and business has been booming. Levain Bakery is celebrating 30 years in business, and its co-founders are out with a new book to commemorate the milestone. Levain Bakery, a story of friendship, community, and cookies. Joining us to discuss are the authors of that book and the co-founders of Levain Bakery, Pam Weeks and Connie McDonald. Great to have you both with us.
Oh, thank you so much for having us. It's really exciting to be here.
So as we've been talking about, it's an interesting time for the consumer because, okay, inflation really sticky. When it comes to prices, they're certainly elevated relative to where they have been over the past decade or so. And Connie, I'll start with you. You guys are celebrating 30 years in business. You've seen a lot of different types of environments when it comes to this economy. How does that impact your business and the, cookies and everything else that you sell?
Yeah, like you said, we've been around for 30 years. We've seen so many different things happen in the world and in the economy. And it seems as though people always seem to want a treat, whether in good times or bad. So they always seem to find their way to us. So it's we're fortunate in that respect.
Yeah, it's interesting, right? It sort of falls into the accessible luxury category. It's still a treat that isn't going to break the bank unless the cookies are made out of gold. But Pam, talk to us about what it's meant from your side, too. When it comes to sourcing ingredients, things along those lines, we know that egg prices have been all over the place, not to talk about cocoa as well. And I wonder what that feels like from the perspective of where you're sitting and trying to expand as well.
Well, as Connie said, we've been doing this for 30 years now, and so we've seen a lot of different things happen that affect prices and costing. But we stick to what we do. We focus on what we do well, and we're not going to change the quality of our ingredients, and we just stick to that.
I am curious just about just starting a business, any type of business, particularly in a city like New York, which is high cost, high rents and high labor costs, et cetera, here. Can people replicate what you did in this day and age relative to what you started 30 years ago?
I think it would be really different. It was a completely different time. I mean, there was no social media. It was really a very different time. So I feel really lucky that we did it then. There were challenges then and, but different challenges now.
I am curious, though, Connie, too, about just this idea of the expansion that you've had. I mean, 19 stores is a lot, but that's relatively slow. And we've seen, particularly in this new economy, somebody will come up with an idea. They'll be sort of one shop for a couple of years, and they get some private equity money. And next thing you know, they're on every corner, around the city for better or for worse. And I am curious as to, did you not ever have that opportunity, or were you just not tempted by it?
Well, that's really the reason why Pam and I are on the earth right now.
Yeah.
We have appointed ourselves the guardians of the brand. Yeah. And although we have an amazing team and everyone kind of feels that, we all feel very passionate about just that not happening. Yeah. So while we are expanding, 19 stores is great. It's a lot more than we ever thought we would have. But by comparison, it's really just a very small amount. So again, like next year, we opened 2 stores this year. We plan to open 2 stores next year. So very slowly. And like what you were asking Pam, we are finding, I think a real key is to find also real estate that is affordable. That's, that's in a great location, but that the rents are manageable. And it can be done. It just takes a little more time.
Most of your shops, at least the ones I've been into.
Pardon me?
Most of the shops you have, at least the ones I've been into, are relatively small.
Yes.
Really small footprints.
Yes.
Is that deliberate?
It is deliberate, yeah.
Okay.
I mean, we don't need a huge location, and we also like the intimate feeling it has. We look for real estate where we can become a part of the community. I mean, we want to recreate that 74th Street experience from 30 years ago everywhere that we open.
I'd love to talk a little bit about the menu as well, because you actually began by baking bread. Now, of course, the cookie is so well known when it comes to that enormous puck that you get from Levain. And how do you think about expanding the menu? What does the decision tree look like when you're thinking about, adding a baked good or item?
Again, it's very, very careful, very methodical. We want to be sure that whatever we end up putting on our menu is really good. That we like to think that people come to Levain knowing that whatever they try is going to be really good, not thinking, oh gosh, I wonder, because you never really know because we're always trying something. So that's like one of the real keys.
Yeah, I think people like knowing that they can expect something specific and a quality that they know and love. And we don't make anything that Connie and I don't love ourselves. So I think that really helps.
Yeah, absolutely. Sort of the repeatable experience too when it comes to the consistency of the quality. You think about a lot of chains that are trying to expand, and certainly there's pitfalls there. Let's talk a little bit about the book, because again, you've been in business for 30 years. Obviously, you guys have been friends since before that too. Why now to write this book and release it?
I think that we finally, took a step back, and we are kind of stepping back a little bit. And there were like so many stories that we wanted to share, and also people that wanted to share our story like with us. In the book, there are so many people that share their stories, and it was really very, at times, like super emotional.
I think our story is really about the people so much, not just us, our customers, our team members, our vendors. And we talk a lot about that in the book, and a lot of people shared their stories, and it was really so amazing. It's so gratifying, and I hope you'll read the book and enjoy it. I think we created a brand in a slightly different way than most people.
Yeah, we had one really interesting thing. We did a podcast with it was an entrepreneurial podcast, and the host of the podcast said that the book was one of the most important entrepreneurial books that because it was just different, the approach that we took.
Different perspective. Yeah.
All right, well, I think we're going to get a copy of that today. I can't wait to read it. And always great to talk to both of you here. What has basically become, at this stage, I guess we can just call it a New York institution, Levain Bakery, now a chain of 19 bakeries across New York City. Our thanks there to Pam Weeks and Connie McDonald. All right, when we come back, we're going to set you up for what to watch next week, and it is a busy week. This is Bloomberg. We are expecting to get a few more reports from retail companies next week, including from Best Buy, Abercrombie & Fitch, and Kohl's. Lily Meier joins us right now, our specialty retail reporter here at Bloomberg, to talk about what to expect out of some of these companies. And let's just get Kohl's out of the way, because this is definitely an idiosyncratic story, a company that's been trying to kind of reinvent itself and also still looking for a new CEO, right?
Yeah, I think now will be an interesting moment for Kohl's because people really want deals, and that's one thing Kohl's can provide. So I'll be really interested to see if they do better because consumers are feeling really cash-strapped.
Yeah.
I really want to talk about Abercrombie & Fitch because what an interesting story. They were sort of the poster child, best in class in the apparel category for 2 years running. Then you take a look at year-to-date performance, down over 50% on a total return basis. What exactly is going on, and what could change when we get these numbers?
Yeah, I think Abercrombie had so much hype. People were so excited about the brand. It was coming back, and I don't think they've been able to quite keep that excitement going. I think now their bright spot is really Hollister, their teen brand. I remember it from when I was younger, and I think that's the new brand that they've really started to get excitement going about.
Well, it's kind of interesting. We talk about kind of the turnaround that a lot of people have been looking at with regards to Abercrombie, maybe looking for a turnaround out of Kohl's. Let's talk about Best Buy, because there was a turnaround there, and then I was confused. Is the turnaround over? I mean, I know Corey Berry's been there for quite some time. She's had a chance to really put her stamp on it. Last holiday season, things looked relatively decent, but did that carry through?
I think tariffs have really impacted Best Buy. Even last quarter, they broke a multi-year sales slump, and the market still wasn't thrilled. I think the tariff impact, they get a lot of electronics out of companies that have been, or countries that have been impacted by tariffs. And so I think I'll really be looking for what the tariff impact is and how they plan to mitigate it.
Also want to talk about Petco because it's where the pets go, the ticker being there, Woof, but also Woof when you take a look at the performance over the past 5 years, year to date. This one is always interesting to me because there's this narrative out there that Americans in particular are willing to spend copious amounts of money on their pets. That's something that I do. I'm sure Romaine does as well. It hasn't. My
dog demands it.
It hasn't necessarily translated, though, to Petco.
Yeah, I don't follow Petco super closely, but I am curious, how, I know people are spending on their pets regardless, even when they pull back more broadly.
Do you not like pets?
I love pets.
Oh, okay, all right, just checking. Not to put you on the spot.
No, love dogs, kind of scared of cats, but...
cats are weird.
Yeah, I don't like cats.
I'm a cat lady, so...
That's why it's called Wolf and not...
Yeah, Wolf and not Meow.
I don't know, maybe that would have helped because right now the market cap under $1 billion for Petco, a host of retail earnings to get through next week, a holiday shortened week at that. You're going to be a busy lady. That is Bloomberg's specialty retail reporter, Lily Meier. Meanwhile, let's take a look at the market performance on the week because, boy, there was a lot of volatility. The S&P 500 finishing up about 1%, but that's not the whole story because it was down about 2% on the week. A lot of big questions working their way through the markets right now.
Yeah, this daily chart, I think, doesn't really capture kind of what we saw here on a weekly basis, not just the 2% drop in the S&P, 3% on the NASDAQ, but it's also the volatility in between, and Bitcoin is probably the best example of that.
Yeah, sort of the intraday violent swings that you can see. Bitcoin, you think about where we were as recently as last month, as we were talking about with Stacy-Marie, Ishmael, $125,000 a coin. Now we're knocking on the door of 80,000.
And we didn't have treasuries up there because at least on an aggregate basis, they didn't do a whole lot, but the same thing. There was a ton of volatility in that space. And as far as equities, I forgot which bank put it out, but they had a great data point saying the other day when we had that big sell-off, that was like the fourth most volatile day that we've had basically since the global financial crisis.
Absolutely, I'd believe. And you think about the bond market too. The big question there, what is this Federal Reserve going to do? What are they going to do specifically next month? That seems to be a hot debate right now.
Well, before we get to next month, of course, we have to look at next week, a holiday shortened week because of Thanksgiving here in the United States. We do have the G20 summit in South Africa kicking off on Sunday. On Monday, we hear from ECB President Christine Lagarde. But Tuesday, that's going to be a big day here in the U.S.
Absolutely. U.S. PPI, retail sales, and consumer confidence. We also have earnings from Alibaba, Dell, Kohl's, Dick's Sporting Goods, and Best Buy.
And that earnings flow continues on Wednesday. We're also going to get some earnings out of Deere. Remember, Thursday, markets are closed for the Thanksgiving holiday. And Friday, are you working on Friday?
No, I'm not, but I'll be watching you fondly. Because
it is a shortened trading day. I will be doing a takeover of Bloomberg Surveillance, 6 a.m. to 9 a.m. Katie, set your alarm. It's going to be fantastic. That does it for us here on The Close. She says yes. This is Bloomberg.